Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson. I'm making professional trading simple. We saw basically what amounted to another consolidation day today in the markets as they moved sideways once again. Very common behavior, a lot of what we've been seeing over the past few weeks as they make a big break to the upside. If we look at it from a 60-minute, first things first, if you signed up for my newsletter in the last week or so and you have not received anything from me about how to get into the subscribers area, you need to email me. Let me know. I am very good about getting back to those requests as I get them, but not everybody gets them. Sometimes they get it in your spam folder or your trash folder or whatever to begin with until you okay my email address. So if you are not getting subscribers information from me at this point, email me. Let me know you're not. I want to make sure you're on that list. All right. So if we take a look at the 60-minute chart here, you can kind of see what we've been working against. And that's this big trend line here. Pretty much a straight up move, so these trend lines are a lot of times very difficult to get a hold on when they move straight up like this. So it was a lot easier when it's trending nicely like what we see here. But in this case, this is how this one would be drawn. So ultimately you want to see a break of that and then a move down from there. Like I said, in this case, I'm pretty happy with this trend line here. But for all practical purposes, if we look at the NASDAQ and the SPX, you'll see that this one here looks like we broke out of it and are now retesting the backside of it. The other two, I think, kind of look like we're just kind of on this line. So we're gonna go with that. We're gonna give the markets benefit of the doubt because it's what we've been seeing. Ultimately, what we're looking for is a break below 250 or a break below the 20-day or 20 period moving average. Sorry, takes you back to the 10,200 area. Then below that, it's back here to about this 10,125, whatever, 10,110 area would be the next line of support below that. Still too early to tell. It's had a very good run up this week, and if we flip to a daily, I'll show you precisely what I'm talking about. As you can see, we really touched the upside of that channel, and I told you that would be a very defensible place to go short because all we've seen is touch here, touch here, touch here, touch here every time it's held, and every time it's been a good shorting opportunity. Now, you may have had to sit through a little bit of pain as it moved sideways to up, which is what we've been seeing in all of these, sideways to up a little bit, sideways to up a little bit. We might see the same thing here. Maybe it's sideways to up a little bit and works its way into this 10,400 area. But anything up here at this channel line is a pretty safe short. And then, of course, if we do head to the downside, you're looking at the 20-day, this channel line, this secondary resistance below it, which is also the 50, and that's ultimately what we want to get through when we break all of this. So be watching this area here. Anything up in this area is a pretty defensible shorting area if you're looking to get short. And it might even be kind of a longer term hold, depending on how far the markets pull back. That could be 2-3 days. It could be 6-7 days, or do something like what this did. We just don't know yet in the Dow. So moving ahead to the NASDAQ, you can see same type of thing, straight up, just kind of moving sideways, waiting for the 20 period moving average to catch up with it, and then we'll see what happens. If it breaks below that, then we could see that pull back into this area. Otherwise, look for this 20 to maybe act as support and push it up ever so slightly again. NDX on a daily, sitting on top of or right at this overhead resistance. Now, people are going to look at this and go, huge move up, big spinning top doji candle up here. That's a reversal candle. We're definitely going down from here. No, we're not. That doesn't mean that we're definitely going anywhere. These candles, these reversal candles, require confirmation. So don't jump to conclusions just because you see these candles. Let's wait and see what tomorrow brings before we make any judgment as to whether or not, or what kind of a candle that was. The NASDAQ here on a weekly, this was a head and shoulders. Pretty much call it broken now. The head and shoulders that might have been potentially forming on the weekly, done. Now we're looking at coming back up here to this 1800 area as we talked about before the end of the week. We'll see if that happens. SPX, as you can see here, here's that big channel line trend line drawn up. We have consolidated sideways into it. Support below us, support to the right of us, and resistance above us. And here we are, smack in the middle with you. On a daily, you can see us running up here. Here's that orange line that we talked about from yesterday. Orange. There we go. There's the lines running through here. Here we have the support. Here we have the support. Here we have the resistance. Right up at this previous overhead resistance as well. So as we're running up here, you can see that we are kind of stuck right here. Potential for a turn here, absolutely. Why not? We've got kind of the double resistance. Maybe it does what some of the other stuff has done, and that's gap above it. And then, of course, the bears will really cover. If they can get out back here in this area, they'll cover, and that'll drive the price back up. I don't know if it has enough steam to gap up overnight that far. That would have to be a pretty good gap of 6-8 points. You know what might happen depending on, I think initial claims come out tomorrow. But I'll be honest with you, the markets are just going to do whatever they want to do. I can talk about this for a long time, but I won't because I'm being nice tonight and trying to make this quick video. But ultimately, if we go back to March, what was unemployment? 4, 5, 6%, somewhere back there, and now we're at 10.2. So the markets have not cared at this point. The markets have not cared that the unemployment rate is going up. The markets just continue to climb. Will it make a difference later on? You betcha. Because I still believe that the news follows the markets. The markets make the news. So one of these Fridays, we're going to have a huge crash, and guess what the headlines are going to read? Markets crash on unemployment numbers. Really? Well, where were those headlines, 5 months ago? We could have been saying this the entire way up. So we'll wait and see if that comes to fruition. But watch initial claims. The market's just going to do what it's going to do. So don't base all of your decision on what the initial claims come out with tomorrow. I don't know if it'll even make that big of a difference, to be honest with you. We'll wait and see what we get tomorrow. But we are getting very stretched up here. I do not recommend. Do not recommend that you go long unless it's a really quick intraday trade. We got that head fake. Remember that head fake I told you we could get? Big money buying down here, push it above 1100, and then sell to those guys that jump in over here, trap them. That's exactly what we saw today. Pushed to 1105 and quickly retreated right back down. Didn't stay up there for, I don't know, even a half an hour or something. It didn't stay up there very long. On a 60-minute, which is what I watch, we did not close above that 1100 area. It was up and back down again. So once again, that played out just as expected. I hope you guys were paying attention to that and looking for a more definite push above the 1100 area. If you watched my video yesterday, then you weren't surprised by this little move here. Move above it, come back down, close below it. That is not shouldn't have took you by surprise. From a weekly standpoint, looking to see if we get back here and retest the underside of that rising wedge. Still a couple days left, so we'll see what the rest of the week brings. The VIX put in a nice hammer down here, but once again means nothing to me at this point until we see some confirmation. So we're still doing okay from a bullish standpoint on the VIX, but this has not quite completed yet. So we'll see what we get the next couple days on the VIX. On the weekly, it did tag this dotted line, as I said it probably would. If it made it back down here, I said this was the first line of support. Sure enough, that's what we tagged today, ran right back away from it. It is a weekly candle here. We obviously have not finished out the week, so we'll wait and see where this closes. This might come back up, though, and maybe it finishes up and above this support. Still way too early to tell. Apple on a 60-minute. There you go.